Yes. Hold on. Okay. Yeah. So here's our topic today for today's class. Let's go over to 15 minutes. Oh, shit. Have you gotten your laptop now, right?
No, no.
Yeah, you have to try so that you can be practicing on your system too. You understand? Today's class, due to my area network towards evening time, so that's why we I shifted it this afternoon. So our topic will be on 2022 model. Yeah, over here. So how do you trade the model? And when a liquidity is swept, like we have over here, here is a liquidity resting above. Here is the high before we traded up and closed. Then we took at the buy side here. So it's a buy side liquidity that has been purged. So to trade the 2022 model, you are looking for when a liquidity is purged. If we are bearish, this is a bearish trend. We are selling. That's set delivery. You can see it here. This movement here from here down here is a set delivery. While here is a buy side delivery that we took out this buy side here. So you are waiting for a liquidity like this to be purged, to be taken. Then once we have a break of structure like this, here is the previous low. There's no other low that have taken this. This is the low that created this range that took out this buy side liquidity. Okay, here is the last close candle of the bearish that went up to take out this buy side liquidity. Here is the movement, the low that started it. So it's the last close candle standing as other block. As we took out the buy side, so price started retracing back, like redelivering for a set side delivery. All this set side delivery. Below here are set side. Below here are set side delivery, set side liquidity resting below. All this low, all this low. They are all set side liquidity. So we have taken the buy side liquidity. So the algo we seek for set side liquidity resting below is a algorithmic trading, and depending on the time of the day, time is the first factor in trading. Okay. So as we have taken the buy side delivery, buy side liquidity here, so we now seek for the set side liquidity resting below. This is the set side liquidity, that is the low, while high is the buy side delivery. So we have taken the low here, which is a market shifting structure. That's the full meaning of the MSS. Market shifting structure. Yeah. Market shifting structure is like signifying that we have shifted from buying model to selling model. Okay.
Uh,
Yeah. So when that occurs, like the buy side is being purged, you wait for price to take the low, and here we come becomes our breaker block. Then if any fair value gap created, buy side liquidity taken, yes. Low taken, that change the market structure, yes. This is the low here. Any fair value gap created, yes. Here is a fair value gap, and we also have a fair value gap here, which turn to a, we have violated it. It's now inversion fair value gap. This is a fair value gap. Before we violated it, it's now inversion fair value gap. Wait for price to trade into the fair value gap. You wait for price to trade into it. You can see it here. You have to, it's patient. You have to have patience for price to trade into it. Then depending on the time of the day, we have 3 to 3:15 macro to 3:45 macro that we drop. So it's seeking for the low below. So you wait for price to trade into the fair value gap. Look for next draw on liquidity. Draw on liquidity, that's a short form. Below price, below, that's below all this sell side liquidity, that's draw on liquidity. Draw on liquidity, sell side liquidity. Then above price is something above, below price is under. So you wait, you look for next draw on liquidity below price or any inefficiency. That's on when you have narrative of where price is heading to. We already have a narrative that we are in sell side delivery, so it will be easier to anticipate since we have the narrative of where price is going. So once this is done, market shifting structure that shifted the market structure, any fair value gap, we have fair value gap here, CB, buy sell side inefficiency, buy side liquidity. Then while here BC, before we violated it, BC, buy side inefficiency, sell side imbalance. Then we violated it here, we trade below and close below it. That's price violated it. It did not stand as a support level. Now trading back to it, it will stand as a resistance level, premium level. So from premium to discount, from discount to premium, that's how trading is. Okay, so you wait for price to trade into this inversion fair value gap, which is this that have turned to inversion fair value gap because of you have violated it. It now turns to inversion fair value gap. Why here is CB, is a fair value gap, CB, sell side imbalance, buy side inefficiency, is standing as a major resistance level also. So you wait for price to trade into it, then you look for next draw on liquidity. You can decide to take your profit here. Here is a draw on liquidity, sell side liquidity. That's a sell side liquidity. So you can wait for and take your profit here. Or if you have patience enough, you have to develop patience too. You wait for it to get lower, or you wait for it to get here and take your profit. Okay, so here is a sell side delivery. So price is coming to take all the sell side liquidity resting below price. These are all sell side liquidity. That's about this model 2022 model setup. This is a setup. Once you see this kind of a thing in the marketplace, then you target the next draw on liquidity below price after a market shifting structure. If any fair value gap here, or in a inversion fair value gap, which is this, you can enter here. Here is another block. Here is another block. You can see where price traded. Other block also stands as a major or resistance level in the market too. Other block, so you can see only the wick was touching the other block. Then the body closed inside the inversion fair value gap, which is this gap here between this tiny candle low and this candle high. There is a gap there. It's a space, a void. It's called fair value gap. Now we have violated it. Price have violated it by trading below it and close below. Then price coming inside it again, like redelivering inside it. It will now stand as a major resistance level, premium level. Why? Because we are in sell side delivery. We have targets of where price is going, of taking this sell side liquidity. Already we have taken a buy side liquidity, so price will seek for the lows for the sell side liquidity. We have already fair value gap, CB, see price traded into it. Then we have another fair value gap here too. Fair value gap, there are spooling points. There are points where price starts to spool, going for a macro or seeking for inefficiency or liquidity below or above price. So you have to wait for price to trade into the fair value gap if you are utilizing this setup after a market shifting structure, which is this market shifting structure. Market shifting structure that we have shifted from buying model to selling model. That's the meaning of market shifting structure. We have shifted from buying to selling now. And we created a fair value gap here already before price went up and we deliver. Then violated it, trade below and close below it. Fall. So price coming inside it again, it now stand as a major resistance. That's premium level now. Here becomes a premium level. Up is premium, then down is discount level. Once price trade inside it here, you can short, you can sell short. You can put your stop loss here, or if you are scared, you put your stop loss at the high. You can see price did not come close there. Price did not come close here if you know what you are doing. So you put your stop loss above price, above your entry. Your stop loss should not be around here. It should be above your entry. If we are selling above your entry, you can be here at this other block, last close candle, or above here, somewhere there. Then you can take your profit, your first partial here. You can see after price took out the sell side liquidity, price went up to take the buy side liquidity. That's to show you how active this market. Liquidity means how active a market is. We run from liquidity to liquidity. After taking the sell side liquidity here, price went to take the buy side. Here is a buy side liquidity. Last close candle of the bullish. After we break below here, created another fair value gap that price traded into, then drop. Then price went back there to test it again. It can be reclaimed twice. Then we went inside there with a wick. This wick, the body will tell you the story. High, lower high. This body candle did not come up close here. It was only the wick that took up the sell side, buy side liquidity here above. So we can see short again. You can see sell. Where is it going to take this sell side liquidity? Because we are in sell delivery. Okay. So same thing here. After taking the sell side liquidity below here, you can see how price reverse. Then we took a high here. This is low, high, lower low. This candle break above the previous low, previous high, making it to be a breaker. Here is our breaker. Then after breaking above, we started trading high to reclaim inside this fair value gap CB. CB, sell side inefficiency, buy side imbalance. Here is our major premium level, resistance level. It's a major resistance level. You can see price is not able to break above it. So a resistance is hard for price to break above it. You can only come and retest on it. You can see here, touch it. We had a touch, then we had a touch here, then we drop. This body is higher than this body, but this is the highest body, the higher high, which is the last close candle of the bullish. Until we break above this body, which will now turn to a market shifting structure, but we are not able to break this high that was created after the low here. We took out this low. After we took out this low, this is the previous high, and no other high have traded above it. The bullish candle is the high. So you trading inside the CB with wick, just a touch. But here is a premium level. It's a premium level. So price started trading down. Before we had this run up here inside the CB, created a low here that deliver inside a fair value gap. Here is a fair value gap. So we create this is a low, last close candle of the bearish before this movement to take this high. The body will tell you the story. The body took out this body. You can see the wick. If you half of the wick is also a major resistance and support level. So to measure the wick, you use your Fibonacci. This is Fibonacci. Fibonacci, your Fib retracement is what you use to in measuring at your levels, your different level. You have 75% level, 25% level. Let me show you. We have 25% level, 75% level, we have 50% level, and 35% level. Okay, when you get your laptop, I will say you set yours like this. Then we have all this is for standard deviation. In our next class, we talk about it. So to get a 50%, you use your Fibonacci. This is your Fibonacci retracement. To anchor this week, the 50% of it, you anchor from the high of the week, where the week stop. The week shows that price will reach fault here, not the body. The week showing that price reach at this high by taking the previous high by week, not with the body. High, lower high. The body will tell you the story. It's only the week that went inside the CB, the fair value gap, to take the previous high, buy side liquidity. Then we traded down again. Coming here, the body took out this body. You can see it. We took out the high here with the body, but was not able to take the high here with the body. This high is higher than this high here. So to measure the wick, you anchor from the high of the candle, the wick, to where the body close. Okay, this is a bearish candle, to where the body open for bearish candle. For bearish candle, we open high, then close low. For bullish candle, we open low and close high. So you measure from the high where the wick we reach forth at the wick, the high of the wick, to where the body open. The 50% of it, that's the blue line you are seeing, that's the 50% of the wick. E also stand as a major resistance or support level. Sorry. So here now is the 50% of the wick. You also have to annotate this while practicing on your own chart. Okay, you'll be annotating this. It will help you to know and see what price is doing and reacting at those levels. You understand? So the body was not able to break above this wick, which is a major resistance premium level. Therefore, the body was not able to break above it. So it was only the wick that touched it and then deliver into this fair value gap CB. Then we had a breakdown to take this previous low that formed this range, this movement from this low down to here. We have taken the low that formed it with this candle. You can see the speed of the candle, the volume of the candle that took it. That's market shifting structure. You can utilize the 2022 model here too. After taking the low, that's market if there are any market shifting structure, yes. Fair value gap, yes. Here is our breaker. You can enter at the breaker. Here is our breaker. This whole candle, bearish candle, is our breaker. So you can enter at the breaker once price trading into it. It's also a major support and resistance level breaker. It's a PDR. Enter here, put your stop loss above here. Then you look for the next liquidity. Draw on liquidity below. Here is a set side liquidity below. When you enter here, then you take profit here. You have made money. Or you zoom and check. Here is a fair value gap. You see, that's where price traded to. Price is going down to seek for liquidity resting below or any inefficiency below price since we are in set side delivery. So to measure out this fair value gap, you anchor from the high of this candle. This candle, the low of it, and this candle, the high of it. This space is a fair value gap, it's a void, it's still empty, like open, it's a hole. Like when you are painting a wall, as a painter, you have to come down and repaint some areas you need to fill up, you understand, before you continue your finishing work. So it's like a hole. So price needs to come and deliver inside it to fill it up. So to measure the inefficiency, it's an inefficiency. So you measure from the high, from this low, this candle low to this candle high, 50% of it, that's here. That's consequent encroachment, half of any inefficiency. That's consequent encroachment. You see, that's where the price traded to for this our set delivery, set side delivery. It's coming here. That's our narrative at the inefficiency resting below. So you target for the 50% for price to deliver into the 50% of it. That's it. From this movement here, from here to here, you have make money for the day. Once you have the narrative of where price is going, it will be more easier for you to anticipate price, then know your entry and your exit. You can see after we reach at the inefficiency 50% of the fair value gap, BC. This is BC. BC. It was created when we are buying, buy side inefficiency, sell side imbalance. But if we are selling, like here, if you are selling like here, for example, is CB created while we are selling. That is sell side inefficiency, buy side imbalance. That's the meaning CB. So after we reach at the consequent encroachment of the BC fair value gap, we force rally, that is this is a consolidation, accumulation, time distortion, the whole of this range, the whole of this range here is accumulation. You can see only the week touch at the 50%, the consequent encroachment. Then when you see something like this accumulation, time distortion, you wait for price to break out. Then as we break out, we took out, we reach forth at the consequent encroachment, then went up. Here is a high. Here is a high. Here is lower than here. This low is lower than this low. This high is low high. The bullish candle resting above. Then trading above it will now make it a breaker. When you have something like this, when you see something after a liquidity is taken, or after we deliver into any inefficiency, and you will see something like this, a low, a high, then a lower low. As we are break above this high, this previous high, you now turn to a breaker. Okay, then if any inefficiency, fair value gap created around here, don't chase price. Wait for price to deliver inside the fair value gap. Price will surely come and deliver into the fair value gap. Then you look for any draw on liquidity above price, which is here now. You can see we break above here, above this high. Then we created a fair value gap here between this candle low and this bearish candle high. There is a fair value gap there. And also we have a breaker here standing as a major support level. This breaker standing as a major support level. You can see that's where price deliver into. So you have to wait for price to deliver into this breaker or this inefficiency here. We first deliver into this inefficiency, then drop into the breaker. Then you look for next liquidity, draw on liquidity above. You can see price went there to take the liquidity above here. That's a liquidity. It's a high buy side liquidity. That's the buy side liquidity resting above. After we had a breaker, created a fair value gap, then wait for price to trade into the breaker or inefficiency and buy. Then put your stop loss below here at the low. Then profit, you can take your profits at the buy side liquidity. Okay. Then we after reaching forth at the buy side, taking the buy side liquidity, price still drop. We are still in sell side delivery. Then coming to buy side delivery, here is a buy side delivery. Here is a buy side delivery. We are taking the low. Here is a sell side liquidity purge. This sell side liquidity. So around here, see it. Here is a sell side liquidity. The low that created this whole of movement, the low of it is here. We took out the high here, at the high, then went up again to take this high created. So coming down, that is selling. Price the algo we seek for the liquidity resting below. So here we took out the low. This is where we took out the low. So after taking out the low, you can see price revise, like redeliver to take the buy side liquidity resting above too here. So once you have the narrative of where price is going, it will now be more easier for you to anticipate price and enter. You can see after taking a sell side liquidity, after we purge out the liquidity below here, we had a low, then created a high, this candle here, the bullish candle. This low is low higher than this low and higher than this low. We took out a high here, low, high, then we had a lower low. We trade up to take the low to break above it. Then price took out the high. You can see it here at the high, the buy side liquidity. Price going up is going to seek for a liquidity, or coming down, coming to seek for a liquidity. That's what you need to understand about the algo. This is algorithmic trading. We seek for liquidity resting above or any inefficiency resting above. Same thing if we are bearish, if you are selling, price is seeking for liquidity resting below price or any inefficiency resting below price. So after taking the high here, the buy side liquidity traded down to take the lows here, the sell side liquidity. Sellers are resting below here, so we took them off. This is when you know that retailers, they are about to buy. So after taking the low here, because we have taken a major low here already, that's the major low here. It's a major low that created this whole movement, because we are taking the high. This high is the high. The high has been purged. That is the high. It has been purged. So we took out a major low. When you take out a major low, price tend to redeliver to and seek for a liquidity, that's buy side liquidity, because we are taking a sell side liquidity, a major sell side liquidity resting below price. So after taking it, the algo will seek for a buy side liquidity resting above. All these are buy side liquidity. Here is a buy side liquidity. Here is a high, a buy side liquidity. We have a buy side liquidity, buy side liquidity. So after taking a major low, a major sell side liquidity, same thing after taking a buy side liquidity, the algo will seek for a sell side liquidity resting below too. So you can see the movement here, traded up, we took out the low, then we started trading up, delivering an inefficiency. So price coming back is coming to this breaker. Here is our major breaker. You can see we are just touching, just a touch. This this is when you know that we are about to buy, that market is buying. When you start seeing something like this, a low, higher 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 low. This is a buys delivery, buy side delivery. When you start seeing something like this in the marketplace, a higher low, here is other block, last close candle. So if you are bullish, you are looking at every last close candle to stand as a other block. Here is another block, last close candle. This candle is not lower than here, rather is higher. Why here too is higher? Here too same higher. So we are having a low, higher low, higher low, higher low, higher low. So when you see this kind of a thing in the marketplace, know that we are buying. Then when you start seeing something like this here too, a high, lower high, lower high, lower high, then is sell side delivery. You can see where we traded up to take the buy side liquidity resting above the buy side liquidity resting above here. Here is a cool movement to make money for the day from here, from this movement up there, to make a cool money for the day. Then you'll be okay for the day. You'll be okay for the day. You don't need to come back again for the day to trade. Once you make money in the morning or afternoon time, you just be okay, be content with the money you made for the day. Just be content. You can only take read, okay? You don't over trade. And it's not every time you trade, you don't trade every day. You have to have specific days to trade. Like if we had a non-farm payroll on Thursday and Friday, that's a major news day. On Thursday and Fridays, on Monday, you don't need to trade as a new student, because on Monday market is a kind of in a consolidation mode, rearranging. Then you can come on Tuesday and trade. You see a setup. Wednesday you can see a setup. Then if we have a major news on Friday, Thursday, then you can trade Monday, Tuesday against the news. Then after the news, you don't trade on a news day. You don't know where price is going as a new student. You don't have narrative of where price is going. You can run to any level with speed. Bam, you will see it. It will move with speed, not with the normal movement like volatility, speed of price. You will see it. So you have to wait maybe 30 minutes, or you come next day to trade. You will see a setup. There will always be a setup here, always an opportunity here. So you don't rush, you don't chase price. Then another thing is risk management. You have to apply risk management here in this industry. It's what that will save you. You protect your capital. You don't over leverage, over trade. That's gambling. There is difference between gambling and trading. Once you have the skill, it's no more gambling. But when you come here and gamble, you see, you come and say trading is hard. Is Yeah, it's hard. It's hard. Yeah, you have to accept that it's hard to learn. It's hard, but you don't gamble. Okay, you don't gamble. You trade your model. You can practice this model, this 2022 model. So you check it anytime you see something of this pattern, a break of structure, a fair value gap, or inversion, and price trade into it and not able to trade above it, then you can trade it, short it. Then you look for any draw on liquidity for your profit. All this thing for your profit. You can see price deliver to them. You can take them for your profit. Then once you are in profit, then you can readjust your stop loss back to where you enter. That's break even. You put your stop loss at break even. Once you put it at the break even, it means that if price is going to go against you, you will not be in loss, you will not be in profit. You just come out like when you use maybe 5k to enter market to buy something, you do not buy, you do not sell, you just come out with your 5k. That's break even. That's the work of it, break even. Okay. So you have to practice this. Go to your chart, you will see it and practice them. It's practicing that makes it perfect. Practicing, through practicing, you will see other things too. You will learn other things. You have to challenge yourself, brother. Challenge yourself and practice and practice. 1 hour a day is okay. 1 hour is okay to practice. It's not much in inside 24 hours. You just take out your 1 hour. Can be early morning or when others are sleeping, all those time. You make out time for yourself and practice. Okay.
Okay, okay.
Is there any question you can ask me now? We are live. You can ask your question.
No, for now.
Okay, okay. Yeah. Thanks for showing up for today's class. I really appreciate.
No problem. You have done novel.
Yeah, you have a great day.
Okay, thank you.
You're welcome. Be safe, brother.